Let's get more on the big tech movers from Gene Munster, managing partner at Deepwater Asset Management. Gene, great to have you with us. What'd you make of the results so far? What are the things you want to know?
Melissa, I think you and the panel summed it up well. It just wasn't as bad as people were expecting. I've heard that several times, and I would agree with that. At the base level, what jumped out to me most is there wasn't much that jumped out from these two reports. But that essentially buries the headline here, because the hour and a half here that we're in, this is like power hour for AI, tech geeks, and investors. These two conference calls are really going to set up, I think, the tone for AI for the next 1-2 months. And we're going to hear more, especially from Google. And I think that this is really going to be the substance of what came out tonight. Is going to be how Google is going to talk about their 9 products that are 1 billion and more monthly active users. That is by far the most of any company, and they've been sitting on this AI train since 2017. Microsoft got going back in November. They made the OpenAI investments before that. But I really think that the key takeaways from this earnings period is going to happen in the next hour here, when we hear more from Google on products and hear more from guidance from Microsoft.
Do you feel like you have an understanding as to how AI-powered search will impact the profitability of that business at Alphabet? Or do you think that that is something that the company has to elaborate on?
They have to elaborate on, and I suspect that it's going to be a near-term downdraft in terms of some of the monetization with search. Anytime you see a new platform take off, this happened when Facebook went from desktop to mobile. It happened when Instagram took over Facebook. Google has talked about it with their shorts being impacted, some of their YouTube business being impacted by shorts. Whenever there is a shift, there is typically a step down in terms of monetization. That's the curve that investors want to get their heads around with Google. If not for that, I think Google stock would be up 40% this year. This would probably just lag NVIDIA. But there is that piece, and I think the best thing for Google management to do is just to let investors know, what that that drawback looks like. Our best guess is that the search business is negatively impacted by 5% over the next couple of years in this. But ultimately, we think that it will power higher, much higher clicks per search, less clicks, but much more ARPU per search, and we think that that's going to be a net positive. We think Google is probably one of the best ways to invest in AI over the next 5 years.
Gene, it's Karen. So it's hard for investors to get our arms around, as you said, what it's going to be, how you value all of their AI, and also DeepMind and Google Brain merging. But in terms of the cost cuts, which I've been looking for, which is a lot more tangible and sort of easy to put a multiple on it, are you frustrated with that? Do you expect anything more from them on that?
I hope that they're going to say more about that. Of course, they talked last quarter about this being, they're going to shift the word that they use is a more durable business model. We haven't seen the substance in it, and that has been a slight disappointment. They've cut headcount by, call it 8%, and of course, Meta leads that at 25%. 8% is more or less in line, but I think that there is unfortunately more room for Google to do on the headcount reduction piece. And I think that they probably will do that. And that's part of the reason why they talked about this $70 billion buyback. That's 5% of their float. They're going to be buying back shares, I think, as they talk about some of these headcount reductions in the quarters ahead. I think there's more to come for Google. And I think at that point, it really sets the table for improving margins. But I think in Google's case, there's more to go. We own Google. We like this company. We want to buy more. But I think there's this trough that we're kind of navigating through right now ahead of what's going to be a great outcome for AI and Google.
All right, Gene, thanks for your thoughts initially, and let us know what you hear on those conference calls.
Will do.
Gene Munster. All right, so what are the outstanding issues for these calls, Guy, in your view?
Well, for Microsoft, to me, it seems like, there's this deceleration. Will that reaccelerate at any point? Tim's point is exactly right. I mean, I think the growth part is behind them. Doesn't mean they can't continue to grow. It just decelerates. And what's their end user looking like? I mean, everybody else seems to see a slowdown. Where are they seeing the pickup that's going to basically, in my opinion, allow them to continue to have a valuation that is maybe justifiable for them, but expensive in this environment?
Yeah. Courtney, how about you?
Yeah, I would agree with that. I think really we want to see moving forward for them what is going to be the catalyst to bring them further, right? Because I think everybody isn't so excited about AI. but it's just not profitable yet. So I don't think that's something we can really hang our hats on at this point in time. And I think we do need something we can hang our hats on. Like you're saying, it's a lot easier when we look at cost cutting. We're just not seeing that right now. So I think we need something a little more tangible.